Matt Fractal, back with another video. Today is April 22nd, 2024. We're looking at the dollar index. As you guys know, Matt Fractal, we get right into the video. So on the chart right now, we have a price chart of the dollar index on the monthly time frame. The reason why I'm showing you guys the dollar index on the monthly time frame is because usually the institutions, they're looking at the monthly, the weekly, the daily time frames at the beginning of the week so they can get a direction. And then once they have a direction for the week, they can go intraday during the kill zones, during the news events, and then try to position themselves in line of the higher time frame direction. So with that being said, we're on the monthly time frame. Guys, if you're new to my channel, I would advise you to go to ICT channel, learn his PD arrays, and then if you don't want to go through his full content, you guys can come back and you'll pick up from just knowing the PD arrays. But if not, just sit around and you'll learn as I go through. But this is mainly for the smart money traders that know how to trade or know the concepts, but don't know how to put it together during the monthly, weekly, daily time horizons. So monthly time frame, we have this up close candle back in October of last year. This is what I'm paying attention to right now. It's an order block, but it also is a fair value gap here. Then we have the order block, the low, the open. As you can see, price is at the opening price right now. And then we have the mean threshold, right? So the consequent encroachment, mean threshold, same thing, 50%. Then we have the rejection block, which is the bodies right here. And then we have the old high. So that's what I'm saying. Going back to ICT channel, understanding the PD arrays, it'll be easier to understand when I explain what I'm looking for in terms of where the market's going to go and price action. So let me draw some levels out. We have this order block. Draw that out. And I'm also going to draw out the rejection block, right? As well as the old high. So we have 3 levels on the monthly that we were drawing up to since December. We made a low, swing low. We've been going up. Where are we going up to? This order block, where the open, the close, which is just the rejection block, and then the old high. That's where we're drawing up to. On the downside, on the discount level, I'm also paying attention to this down close candle as well. In December, after we made that low, we rallied. We broke above that high, this candle's high, December. Once we broke above that high, March, we traded down. I was calling this in my Telegram group. We traded down into the down close candle, which is a bullish order block. So let me draw that out. All right. Let's change the color, blue. All right, and then and we had the mean threshold as well. So we traded down in March, and then we continued to rally. So now we're rallying, and we're in April. We rallied into the order block. So let's go down to a weekly time frame. See what levels we have. All right. So I want to explain the discount first because that's where we are coming from. We made that low in December, right? If I look back into price action, we came from this fair value gap here. We rallied, broke this swing high, then we traded lower. This level here is that order block on the monthly, but you can see that it doesn't really line up with anything when you just draw it out on the weekly time frame. So when it comes to refining, if it was an order block on the higher time frame, on the lower time frame, I'm going to look for an order block as well. So we're on a lower time frame, the weekly. The weekly is lower than the monthly. So I want to look for a weekly order block. So I'm going to take this level and I'm going to draw it down to this candle here. All right. This down close candle is the bigger candle on the downside, is bigger than this one. So we're gonna elect to use this as the, sorry for that. Use this as the bullish order block. Price trades down, hits the bullish order block, and we've been rallying ever since. If I grab a Fibonacci tool and I grab the body from here, and then I'm placing, if you guys are not following, I'll show you. I'm placing the fib right here on this body, and I'm placing the fib right here on these bodies. So it's the lowest body, highest body in the range from this low to this high. We trade down into the 62%, which is a discount. On top of, we're trading down into a bullish order block. We trade down into the bullish order block. We rally above this old high. A few weeks ago, I called this in my Telegram group. We had a fair value gap. And we had another rally. Right? So if you guys aren't getting the gist, when we trade into fair value gaps like this, we get rallies. Here, there was no fair value gap. There was the order block. So in markets, yes, you can have one PD array that you always look to use, but unfortunately, you're not. Let me try to re-say this. You're not limited in any way by using one PD array. That actually shows consistency, and it shows that you can stick to one thing. However, if you're going to be in the market and you want to be a time precisionist, you're going to want to know all the PD arrays and when price is going to rally. Price rallies when they trade into fair value gaps, imbalances. Price rallies when they trade into down close candles like this one, because this is a bullish order block. Price rallies. Price also rallies again in fair value gaps. Price rallies when it takes old lows. So we take this old low here and we rally. And then once you start to learn all of the PD arrays, you can start combining them. So old low into an order block, that is a money trade. We have another old low here. We trade down into a fair value gap, money trade. And this is on a weekly time frame. Price is fractal. This could be on a 1, 5, 3, 7-minute chart. It doesn't matter. But it does matter when you're refining your entry models and refining your model in terms of higher time frame, lower time frame, or higher time frame, medium time frame, lower time frame. So the weekly is still considered a higher time frame for me. So monthly, weekly, daily, higher time frame. So for this specific week, I see this fair value gap right here. We traded out of this fair value gap, big push. Last week we had a small range. Didn't really trade too much to the upside, didn't really trade too much to the downside. But this week, we have a fair value gap that formed. And just like 2 weeks ago, how we traded, we opened, traded lower into the fair value gap and rallied into to a higher premium. I'm looking for the same exact thing this week. Trade down into this fair value gap and then hopefully rally above these highs that I've been calling right since the beginning of the year. If this is going to be a market maker buy model, this can be another reaccumulation. So we're looking for a reaccumulation this week. Daily chart, let's go. So on the daily chart, we don't really have to do much because we have our levels. We have this old low here, and we also have this fair value gap here, and it's inside of that higher time frame fair value gap, which is the weekly time frame. So the levels that I will draw out are this old low here, and then the high, or excuse me, the low end of this bullish fair value gap, which would be here. you still have some gap in there from this high to this candle's low. There's still that gap, all right? And we're gonna leave this gray area here for just reference of the weekly fair value gap. And then as you see, we have these old highs here. This is looking like a liquidity pool. So if Monday we close here, Tuesday usually makes the low of the week about 70% of the time. We could trade lower, create the low of the week on Tuesday, and then Wednesday, Thursday, Friday, look and seek the buy side liquidity above these old highs back here, right? That is exactly what I'm looking for this week. Gave you guys my weekly setup scenario for this week. We're looking for these old highs, but as I do all the time, we have to see it from the sell side. We have this old high back here. If we don't trade into this fair value gap first, like on Tuesday or Wednesday, and we continue higher and we trade into this level here, the upper end of the volume imbalance, because we hit the lower end. Let me just show you guys that real quick for reference. I'll make this gray. So we hit that upper end, that lower end, sorry. And now if we don't trade into this fair value gap first on Tuesday or Wednesday, and we trade to the higher end of the volume imbalance on Tuesday or Wednesday, then we look for a Tuesday, Wednesday high of the week to trade back lower, deeper into this weekly fair value gaps range, which I'm going to show you guys again. So this range here, from this candle's high to this candle's low. All right. So that was mainly it. On the dollar index, we can, I guess we can look at it at an hourly time frame. All right. So this is how it would look. All right. Got this high here, high to low. We trade back up into a premium from this high to this low. Get a Fibonacci so I can show you guys. From high to low, we trade up into a premium. Now price is trading lower. However, as we said, the higher time frame looks bullish. So Monday usually is a false direction move or consolidation. So if we're going to be trading lower into Tuesday, which it looks like it can be doing that now, it seems that Tuesday is going to set up the low of the week, and then either Tuesday New York session, Wednesday's New York session, or Thursday's New York session, they should have like a setup where we can buy the dollar or vice versa, sell the euro or the cable, and profit from that move. So guys, watch 105.50 for the week and watch 107.30. All right, that was it, guys. Hope you guys enjoyed. I'm still getting like used to the YouTube again. Big things are coming. There was a rebranding with LAI, and I'll let you guys know everything that's going on. I'm just dropping these videos so you guys know that we're still in tune with the markets. Our analysis is on point. Be on the lookout, guys. Matt Fractal out.